Hi guys, welcome back to our channel here at Financial Hub and another episode of our market breakdown. Well, today we won't talk that much. We have a few things to get into perspective in the markets. We didn't do an analysis last week because we had a few errands to run, but now we are back full time. Our bootcamp video is about to drop this week, so from tomorrow 4 p.m. each and every day from Wednesday, Thursday and Friday they'll be dropping on YouTube, so you can head on to our YouTube channel and put a reminder. You can subscribe to our channel as well and wait for the episodes to drop. Apart from that, we'll be looking at a few pairs here. I'll look at mainly some few currencies, and Ken will look at commodities. And mainly this week what we're waiting for is there's a lot of fundamentals coming out, major fundamentals. We are not that fully much into fundamentals, but there are others such as interest rates, which we have the US interest rates this week. We have the pound UK interest rates, England, and we have the Japanese yen interest rates later on this week. So those are major because with the trade wars going on and with all the uncertainties around the world, there is a lot of speculation that maybe we might have the US Fed reduce their interest rates later on tomorrow. So we'll be waiting for that. So we're not really taking any positions for now. Right now we're just sitting tight and watching, but mainly we'll do an analysis. We'll get to look at that. I'll look at USD card today. I've never done USD card, but I have a really good setup. I shared a bit of it during the boot camp. For all those who are there, you know what I'm talking about, and there's a lot of potential for this pair. I'll also look at maybe Euro USD and maybe Aussie dollar. Then from there, Ken will take the floor and look at the rest of the pair. So that's it, guys. I'm back with full momentum. The first half of the year is about to end, which is the second quarter of the year in the next 2 weeks. So I hope so far you've been achieving your goals and all that, and looking forward to what we're yet to do in the next 6 months of the year. Personally, for us, we're going in full force. We're going to put a lot of content, a lot of work will be put into this second half of the year, and we'll have a really good time with you. People will get to meet many of you people later on in the year. Those such events will be later on released, and we'll let you know what's going on for the next of the year. But for now, let's dive in and analyze the markets. Yeah guys, so now we're down to the charts. I'll start off with USD card and look at the daily chart. Don't really want to go into the weekly chart because there's a lot of in-depth in that I don't think I have time to cover for now. I did that in the bootcamp, so the people in the bootcamp got an extensive look into the USD card on the weekly chart. So I'll just look at the daily chart, and I hope you don't mind. I've changed my analysis a bit. The second quarter, I'm sort of going into that dark magic sort of interface. Maybe it might turn out to be the better, but for my analysis in terms of the way I like chart patterns, I'm seeing it much better on the dark mode. So I hope you can bear with me. If you like it, you can comment below, just tell me what you think about it, and if most of you don't like it, maybe I'll go back to the other one. But for now, let's use this and let's see. So this is USD card, my friends. You know I'm heavy on the Elliott wave, so just to look at it, this is what we have. So if you look at the weekly chart or an extensive longer time frame on the daily chart, we've been having this channel, beautiful channel that we've had all the way till up here. So up here sort of acts as a cap to cap the market on going further up, and you can see now the market has been dropping ever since. So maybe if I just clear this, I like it. It's better on the weekly chart than the daily chart. There we go. So just to look at what is happening over here. So we had sort of this Elliott wave triangle. So once we reached up here, market was capped by this level. So we sort of started my analysis on the USD card is that we're having a long-term downward trend coming, and so far we had this very strong impulse wave which formed my wave 1 currently, and we had this correction of wave 2 which formed a beautiful A, B, C, D, E in terms of Elliott wave analysis. And right now, let's just put this on the side for now. We'll talk about that. you can see want to go to the second over here. We talked about this. Actually, this was around when we were at the boot camp around here, so we're waiting for a very beautiful short position. This came in beautifully. We had that strong momentum which came and broke this line, indicating a very strong bearish momentum in play, but we were capped again by this channel if you look at it properly. So this channel still acted as a good support barrier on the downside for the channel, but market has been going back up ever since that, and right now we are waiting for a very beautiful short position around here in line with my Elliott wave 2. And if I'm able to draw Fibonacci, if you can look from that high all the way to around there, so which we look at better on the 4-hour chart. Right now over here it's not so clear, as you can see. Maybe if I can just change that color, maybe you can put this to blue, and my target this one to blue. Yeah, and if you don't have those coordinates, those are the ones you can look at that and maybe put it. So as you can see right now, we're being capped by 61.8 around here. We'll look at a better one on the 4-hour chart, but so far long-term direction, this is what I'm looking for, the market to drop further down, especially once we retest this level. So once we go back to 1.3445, I'm looking for a very beautiful short position and the market to drop further down. If we are able to break and close above that level, 1.3445, it can be better to sit back and watch what is happening to the market, but I'm more of 70% really for the downward momentum. And if we go down to the 4-hour chart, so looking at the 4-hour chart, what we're seeing right now, once we broke this level, and as you can see back up here, we also had this another beautiful triangle that went 1 2 3 4 5 inside the bigger one that we've seen in the daily time frame. This was a very, very, very good short analysis around up here. So it was a very strong one. Market came, had a small correction, and market fell all the way down there, forming our first wave 1, and now we are having this second wave coming all the way. Now this is inside the second wave from wave 2, as we've seen on the daily chart. Up here is this second wave, so we'll have a very strong extended third wave. So that's what I'm looking for, and right now we're having sort of this correction in line with our Fibonacci, what I was showing in the daily time frame. So if we zoom that and we get to look at what is going on in here, this on the 4-hour chart, so we're sort of having this consolidation around this level. And why is that? As I was saying in the daily time frame, we're having interest rates coming out tomorrow, major interest rates coming out tomorrow. So there's a lot of tension around the world, so in terms of trade wars and a lot of uncertainties around the world, you know, with Brexit and all that, Theresa May coming out of the seat, and basically mainly dealing with trade tensions. In terms of keeping the economy strong, the Feds might just drop the interest rates. So that's why we're having this consolidation. If you also go to the Euro USD, which we look at, what is going on is basically there's no really orders taking place. So from tomorrow, that is almost certain, tomorrow we'll have a lot of movement. We'll have spikes, and that's tomorrow at 9 p.m. Kenyan time. So mainly now from Thursday going on, we might have a lot of momentum once that news has come out. If they reduce the interest rates, maybe. If they increase, which is no, they won't increase. That's not likely to happen. They might either reduce the interest rates from 2.5 to 2.75 down to 2.25 to 2.5. If you're familiar with the interest rates from the United States, that's how they put it. So if that happens, we might see a spike to around this level, have maybe a retest, and it might be a really strong spike that might go even maybe higher, a strong spike before the market drops, and maybe even touch 78.6. maybe if I can put it, maybe let's put it blue, and maybe we can spike all the way to up here. So we're looking at that very closely, but that's basically what I have on USD card, and from there I'm looking to short the pair. So I don't want to get mixed up over here. As I've talked in the boot camp, we covered in ranging markets, we let the bullies, these are just bullies fighting with each other, the bears and the bulls, they're just fighting for who can gain strength in the market. So that's just a no-no. So apart from that, maybe I'll go down, let's look at Euro USD, but that's my analysis on USD CAD. So yeah guys, we're down to the daily chart on the Euro USD, and this is the beautiful analysis we have. As you can see, we've been within this channel for the past, ever since January, the beginning of the year. We've been in this beautiful downtrend. The market has been painting that beautiful sort of like a step downward, and the other week, a few weeks ago, we're within that now, this inner channel, which market was capped by this level around 1.1120, and the market was capped around that level, and the market went back up after that. So following the channel respect and all that, we came and respected the upward channel. As you can see, just like on the other one, we broke this inward channel. Now on USD CAD, that was the triangle that we had, we broke it, we came and respected the channel, the major channel that was in there. So that's basically what we are having over here, as you can see. So what are we seeing? What is going to happen? As usual, also this one, we're waiting for interest rates later on tomorrow, so I'm not really being confused by what is happening with the markets right now. Many spikes can happen. As you can see, we're having an inverted hammer down here, which is a very, very strong indication that the market might rally up and go higher. But what I'm really waiting for is another but what I'm really waiting for is the interest rates tomorrow, because we might see a spike to the downside, retest our support level at 1.1185 in line with the retest of our channel that we broke here very strongly. We can see we had the first retest over here and market went up. We might have another second retest around this level, but we're also being capped by the Fibonacci level 61.8 around here, so at 1.1200, which is a major level for those who trade this pair. So basically we're waiting to see what can happen tomorrow. If you go down to the 4-hour chart, so coming down to the 4-hour chart, what we can see is that the pair is being capped over here with that inverted hammer that we saw earlier on, but really there's not that much momentum. If you look closely, what you're seeing around here is that the market is trying to spike up, but we're having this sort of correction again. We're trying to go up, we're having this correction again. So what might happen, we might be capped by this level 1.1260, and maybe the market might drop now further down, maybe now to retest the levels we're waiting for. But still, let's not ignore the fact that we've been capped by the level 61.8 in line with our resistance support level, 1.1200, which is a major level. Let's not neglect that. Market might be capped here and we might move further up. So as I've written over here, let's watch for USD interest rates on Wednesday. So I don't want to really get confused. I can't talk much about this pair right now. We're just waiting for that level to be capped. But long term, my direction on the USD, Euro USD, is very, very bullish long term, all the way back up to around even 1.150, around that level after we break 1.14 level. So that's basically what I have for now. For the next 2 weeks, once June is coming to an end, and the much we've been trading markets, you know, these times are really crucial times when the first half of the year is about to end, the second quarter, if interest rates change, all those times. We remember last year during June, around that level, during May, June, there was a major week, which that week we had very, very strong fundamentals coming out each and every day when the first half of the year was ending, that propelled us to the second half of the year, which is the third quarter of the year. Major level. And you know, many for the US, many of their economies, many of their companies, their year ends during this time, June, July, then they begin their other year in the market. So that's basically what we have over here. So major time for us to keep in mind that we need to watch the interest rates to propel us and give us that broad overview of where we might go into the second half of the year. So apart from that, I won't talk much. I think because I've covered quite long videos for this one, I might not get into Aussie dollar. I'll cover that in our WhatsApp group, and I'll also cover it, do an article on it for our website, so that I can just do a recap of what's going on. But just to cover a little bit of what happened on Aussie dollar, the past few weeks we had around 6th we had interest rates, which they lowered it to all-time lows at from 1.5. They lowered it by 25 basis points down to 1.25, which is a new record low for the Australian government, which has really hit the market and made Aussie dollar drop. If you go down to the Aussie dollar, you'll see the market falling. It's on a downward capitulation. We've seen Euro Aussie, which has been gaining, also GA, which has been gaining, which is really hit the interest rates really hit the Australian dollar, and that's why we are seeing all those moves. So I'll just cover that and a few more on our website and also on the WhatsApp group. If you're not on our WhatsApp group, look at the link below. You can click on it and you'll join our group. So that's basically what I have. I'll leave the floor to Ken and he'll cover the rest. So till next time, I'll see you guys.
So hi guys, hope you're well and you've been trading markets well. So today I don't have much to say. Caleb has talked about the fundamentals that you're waiting for this week. So we don't expect much movement up to tomorrow, and on Thursday we still have some strong data releases. So markets are pegged in uncertainty for now, and we can already see it in the markets. And I'll be focusing only on commodities this time. There's a reason I've moved more from currencies to commodities. At the stage of the cycle where we are in, commodities are expected to be doing so well, so that's why I've moved most of my trading into commodities now. I'm trying to capitalize on that to maximize on the big movements that are happening on this side. And so I'll just do 3 commodities. I'll do gold, I'll do oil, and finally I'll bring into you silver. I've never done silver, but silver, there's some good money to be made from silver, especially if you know what you're doing. So I'll just jump straight in. I'll start off with oil, then I'll move to gold, and we'll sum up the day by looking at silver. So let's go straight into the charts. So this is oil starting from the weekly charts. I'll start off from the weekly chart, just as I said earlier. And looking at oil, I think I'm suspecting that we might be still getting some bearish momentum. Oil has dropped all the way from 64.5 and currently we're trading at the 51.74 mark. So a drop of almost 1,000 pips from 64.5 all the way to 51. More than 1,000 pips actually, 1,300 pips in a very short time of about a month or two. So looking at oil, closely examining the patterns that have been formed and what this means for the upcoming patterns or what we expect in the markets, then it's evident that we first had a breakout that was a move from the $75 mark all the way to $45 mark, 3,000 pip collapse. We then had a pullback which also acted as a retest of this broken line, and at that point the pullback was also the 61.8 retracement. So if I use my Fibonacci retracement, discover that this was 61.8. Capped by the 61.8, we had the formation of a good shooting star candle and the follow through of some bearish momentum. So for the last 3 weeks or 4 weeks, we've experienced some strong bearish momentum on oil, and oil has moved lower from 16, and now we are trading at 51.75. So what do I see ahead for oil? Oil might break past the $50 mark and might move lower all the way to $35 mark. First of all, before we get a market crash, before we get significant market crashes, oil substantially moves lower. Looking at history, that is the pattern that we've been able to derive. And looking at what is happening currently, we are pricing in a recession soon in the world economy. So that means the markets might be sliding. Markets are always ahead of reality. So thinking in that perspective, then it means that we might be seeing oil move lower all the way to $35, probably before the end of this year or early next year. We gave out another trade on gold, which respected what we were talking about. And now on oil, looking at the patterns, it's evident that we might be moving lower all the way to $35 mark. So 51.76 to $35 mark, still a substantial number of pips to be made. But on the movement down there, because we are not long-term traders, we always look for the direction, then we try and take advantage of the moves as they'll be moving lower. So going down to the daily charts, currently I'm in a short trade on oil. I'm riding a short trade that I executed earlier yesterday. I never gave out the trade on the group. I've been silent for some time now. I've not been giving out some of the trades that I've been taking, but I'll be back soon. So if you look at oil, you can discover that this was wave 1, 2, then you had a 3, and this looks like wave 4, then you have a 5. Anyway, I'm looking for oil to drop all the way to the $50 mark. So you can see I came in at the 52.5 after we had that pull back to 52.5. I honestly expected this one to move to 55, But the S1 acted as a good level. Yesterday's momentum shows some bearish momentum, and today we can expect some continuation to touch the $50 mark, probably before tomorrow, when there'll be the interest rate decision in the United States. So I'm watching for this trade to be complete before tomorrow at night, 9. If it won't be complete, I'll try and manage the trade in a different way. But I'm looking for $50 mark. If we get to the $50 mark and we get some good bullish signals, then I'll be looking for a correction all the way to $55 mark, which will also act as a touch of the upward moving average, a touch of this downward sloping line of the channel, which was broken some times back, and it will also be a pullback of the wave 3. So if we get a move back up to touch $55 mark after touching 50, then that will act as wave 4. Then I'll be looking for the short that I'm talking about, sending this pair lower to 47.5 and ultimately 45 before moving lower to touch $35. So that's my outlook on oil long term. So I'm looking short term for $50 mark. After I get to $50, correction to 55, then you get the continuation. If the $50 mark does not hold, then probably we'll get some new lows at 47.5, but that is not highly probable. I'm not looking for that move downwards. I'll be out at the $50 mark, looking for that bullish correction to touch $55 mark. Going down to the 4-hour chart. So this is the 4-hour chart. We've had a drop, a significant correction, which came in as a solid consolidation, a sideways movement. Then we also had this sideways movement, and now at this point it also looks like we had a sideways movement, but the markets are now moving low. So you can see my entry came in at the 52.5, very good entry level, shooting star candle, and this was also a retracement. So if I use my Fibonacci and measure this retracement, this was capped by 61.8, good shooting star candle, some slight consolidation, and now the drop is coming in. So I'm looking for $50 mark, just like I said earlier, a completion of this pattern ABCD, and then we'll be talking about the long move that I earlier talked about. For the long move to come in, we'll expect perhaps a break of this line. So we'll have this line that I can plot like this. So after we get to the $50 mark, I'm looking for a breakout on this line and a move to touch $55 mark ultimately. So waiting, sitting on my hands, waiting for tomorrow's interest rate decision before deciding how I'll be playing out this commodity. But for now, I'm short. I'm still riding this one. Currently 40 or 50, 60 pips actually in profit from 52.7 to 51.7, actually 100 pips. But I'm still sitting waiting for this one to move lower, at least to $50 mark, so 250 pips. 150 pips still on the table for anyone who wants to take advantage of that, but you'll be coming in at a bad level, so you'd rather wait for another move rather than come in at a bad level. So I'll go down to the next pair. So this is gold on the weekly chart also. I'll start off from the weekly chart. We did a breakdown for gold sometimes back when we were trading at 1340, gave out the whole insight, and fortunately gold has been respecting what we talked about, and we were talking about a move from 1265 to 1360, 1385, ultimately 1400 and 1420. But before getting to 1420, we must remember that 1360 is a strong level of resistance. So breaking past 1360 will not be a task that will be easily done. Looking at the monthly chart, if I label this to 1360, we'll discover that this level has not been broken for quite some time now. So we rejected it one time, two times, the third time, and now we're approaching it the fourth time. So what do I expect on gold? Going down to the daily chart to show you what I expect before we have the huge advancement that I'm talking about upwards. So this is the daily chart. So I can first scrap off this line that I just brought in. This is the daily chart. We talked about this move touching this level, then you had this correction last week, we had this huge advancement. So this is 1, 2, again this is wave 3 using the Elliott wave principle that we always talk about, and we expect a move downward to sink into 1315. But before talking about the move to 1315 or any move to touch 1360, we must remember that this is highly pegged to the US dollar. So tomorrow's interest rate decision, which is highly weighted for, and investors are really looking forward to what the Feds will be doing to the interest rate decision, I don't expect gold to do much up until then. So on gold, I'm sitting tight. You can see I had a short position, which the market seems like it will get to my stop loss. I want to move my stop loss because tomorrow I don't expect to be in while they'll be announcing the interest rate. So if my stop loss is hit before we move down lower, Then I'll be out and I'll be waiting perhaps to come back in tomorrow after the decision is made and after the market has decided on the direction it will be taking. Looking at it from a technical viewpoint, deciding to forget about all the fundamentals that I'm talking about, then it is evident that gold has rejected 1360, 1345. So we had this huge advancement last week on Friday. I expected a touch of 1360, but instead of that, we had a sharp sell-off, making this market close off as a shooting star candle or as a gravestone doji. This signifies that perhaps we'll be getting some bearish momentum coming in, pushing this market slower to 1305. And I honestly expected this to be 1, 2, then this will be wave 3, and this will be 4, coming in at 1305 before we had the huge advancement up to 1385, breaking past 1360, and now entering into the new high territories. But what happened is, yesterday we had some bearish momentum sending this pair lower, but you can see today we have some bullish momentum. So there are two probabilities that I'm looking at. One is we will have a pullback of this move, which I'm going to show you on the 4-hour chart. Or two, we could have a continuation of this move coming back up all the way to touch 1360. All these probabilities are pegged on what will be happening on the interest rate decisions tomorrow. So before we get to the interest rate decisions, I'll be looking at where gold will be trading before they announce, and that will give me a hint of what I expect on the market. Going down to the 4-hour chart to show you what I'm talking about. So yeah, this is the 4-hour chart. So actually had 1, 2, 3, 4, and this is 5. But you can see 5, we never got to touch 1360. I expected a touch of 1360. So what I'm talking about is perhaps we'll have a pullback of this move before getting the drop all the way to 1315 and 1305, ultimately retesting this line that was initially broken. But before that, we have to wait for the Feds. So if I use this Fibonacci, yeah, I'm expecting an R1 touch, 1350, 1355. If we get some good rejection past this level, some good shooting star candles and some good bearish momentum, I'll be shorting this one at a better level, sending this pair lower all the way again to 1315. Before then, we could also be getting this move that will act as a completion of the wave 5. So if I use my Fibonacci again, use this, yeah, I discovered 1370, 1368. So perhaps we'll get that bullish momentum, strong momentum, breaking past this level, going to 1370. So on gold, sitting tight. I'm not holding any position currently on this one, only the position that I talked about on the daily, and it seems like I'll be taken out soon, looking at the market, so I won't be holding any position. I'm waiting for the markets to respond to what the Feds will be doing to the interest rate decisions tomorrow. I'll also be uploading some articles on the site today and tomorrow, so you can check them out before the Feds decide on the interest rate decision. Can also decide to bring in that line. If we get a break past this line moving lower, then we'll be looking for 1315. But before then, we have to wait for tomorrow. I don't expect any significant momentum on this commodity before tomorrow. So let's sit tight, let's wait before making the decision. But at least I've shared with you the probabilities that I expect. So watch the markets before the Feds, then you can decide how you'll be playing the markets. Silver, we're down to silver on the weekly chart. I've never analyzed this commodity, but I've been looking at it recently, and I think there's a lot of money to be made from this. Looking at history, you can discover that silver had made a new high in 2011 at $55 mark. So if I go back in history, all the way to 2011, 2010, when you had the financial crisis, you can see silver was trading at 35. We've even gotten to new highs of 52. But currently we're trading at $14. So I think there's a lot of potential, there's a lot of money to be made on silver. If I was doing it long term, if I had the capital, then I'd be buying silver and bulking up the position, waiting for it to come back, because I expect it to come back. We're actually on the bottom. Right now we're trading at the bottom signs, and when there's a crash that is imminent in the markets, already being priced in because of the global recession, then we expect such commodities to be doing very well, and that's part of the reason why I've been moving into these commodities. Anyway, looking at silver, let's try and see what the markets will be doing. I have my levels marked at the back of my mind, so I haven't marked the levels here, but we have 16, we have 14, we have $15. All these are levels which are at the back of my mind. I expect you to be marking your own levels, and I also don't expect you to follow these things blindly. I expect you to combine this with your own analysis. So if I draw a trend line, first of all, from this point, you discover that silver has bounced off not only 1 time, 2 times, 3 times, or 4 times, but you had the first bounce, second bounce, third bounce, fourth bounce, and this is the fifth bounce on silver. Expecting the formation of a new low. The new low will come in at the 13.5, 13.3, and the $13 mark. So we are looking for 13.5 to 13.0 dollar mark if we are going lower to create new lows. But before moving lower to create new lows, you have to remember that silver currently looks like we had a drop, then we had a correction back up, and this other drop looks like a double bottom. So if this bottom is respected at the $14 mark, if we get the $14 mark to act as a good level of support, then you can expect silver to reverse, break past this line, and move all the way to $18 mark, which will give you an opportunity to capitalize on the move. This will probably happen before the end of the last quarter if you're getting the move back up to 18. But if you're not getting that move, then expect a continuation of this move, sending this pair lower, at least first of all to touch $13 mark. And the touch of the $13 mark will also act as a very good level for you to buy, for those who will be buying, bulking up their positions. We know there are people who do that. So $16 mark, you can see, was the 61.8, some bearish continuation. So if you get this bearish continuation, if you don't get the moving average to crossover, then you can expect a visit of S2, $13 mark, 13.5, 13.3, that zone. I'm looking for that zone, 13.5 to 13 to 12.9, 12.8. Going down to the daily chart now to look at what is happening with the two scenarios that I've mapped out. Now I'm going to the daily chart to look at what I should be doing currently. Currently, looking at silver, what should I be doing? How should I be positioning myself? So I'll first scrap off this line. It shouldn't be seen on the daily. Yeah, that's enough. So on the daily chart, you can see already we have broken past this downward channel. So this means that perhaps bullish momentum is already coming back into the markets. And if I use my Fibonacci tool again to measure this retracement, this was capped by the 78.6 mark. I'm quite solid on that without measuring. So yeah, you can see this was 78.6. So if we get this to be the level that I'm talking about, if we don't go back lower again past this mark, then you can expect the markets to move higher all the way to touch the $18 mark that we talked about. You can see it's coming in clearly with the 61.8 extension. That's a tall order anyway for you to be waiting. So how will you be positioning yourself? Let's come back now and focus on what is happening right now. So we have broken past this channel. We've not gotten a clean retest of the line. So I honestly expected a retest of the line at least at S1 or S2 at the pivot point. But what happened was last week on Friday we had this drop. Last week we had this drop. Then on Friday we had this move back upwards, which was also capped by the drop. Using the Fibonacci tool that I really like, you discover that this was 78.6 again retracement, acted as a good level, and I honestly expected this to sink lower to 14.5, giving us a better level of buying, completing the ABCD pattern, and ultimately retesting this line. What happened instead was the pivot point acted as a good level of support, and using my Fibonacci tool again to measure this other fib, we discover that this was the 61.8, which was expected, and now bullish momentum seems to be coming back in. So on silver, we're also waiting for the decision on the interest rate decisions. Definitely silver will be moving to the direction gold will be moving most of the time, and so we've not had a big advancement on this one like gold. Gold has moved quite some substantial number of pips. For silver, we're still playing in the bottom signs, and this gives us a good opportunity to capitalize on it. It will move, I only think that it will move slower than gold, so it is behind gold. So on silver, I don't have much to say. I'm only waiting for the Feds to announce the decision. If we get the decision to be a dovish stunt, then you can expect these metals to do quite well. And if I go down to the 4-hour chart, I actually have a channel over here that you can capitalize on. Yeah, so we have this channel. We had the first bounce, second bounce, which was capped by the double top. We never had the formation of new highs. And now we've had a move lower, which is capped by the 61.8. So if this one still holds, then you can expect the markets to move lower, higher, to touch R2, which comes in at the 15.2, 15.3. So 14.8 to 15.3. Capitalize on that. If you're trading silver, remember to overposition size. It's a really slow moving pair. There's no substantial number of pips. So for you to make money on this, you need to overposition size so that your trades will balance out with the other currencies that you're trading. So silver, I'm looking for R2 as long as you're sitting above this line. If we break this line, I'm looking for S2 first and ultimately S3 on the way down lower to touch the $13 mark that I earlier talked about on the weekly chart. So that's my outlook on the three commodities that I'm doing, and hope this will be beneficial to you. I'm only riding oil currently, Gold and silver, I'm waiting for tomorrow, but I have the outlooks and I've shared with you the outlooks. So hope tomorrow you'll be able to capitalize on them and to make money off those charts. I'll also be journaling some of the trades that I'll be giving you. I want to look at my hit rate and the number of trades that I've given you, how many will play out as you expect and how many will be wrong. So I'll be looking at that in the journal reviews. We'll journal that for the remaining 6 months of the year before we close down the year, and hope this will be beneficial to you and hope you'll be making money for the remaining part of the year. So that's all from us, guys. Hope you've enjoyed the video, hope you've loved the video, and don't forget to like, comment, subscribe, share, and most of all, invite your fellow forex traders to come and watch our videos. So that's all. Cheers, guys.